Today's guest started 10 companies, 7 failed, 2 sold, 1 scaled. Then he bought a business and then he got obsessed with self-funded search. Grant Hensel, it's part 2 episode with him. Today he's running Entrepreneurial Capital, backing gritty operators who are buying great small businesses at 3 to 5 times EBITDA. Thanks a lot for coming to the show again, Grant.
Thanks, Mick. Great to be here.
Why I decided to invite you back is, yes, you just raised 11 million to invest in self-funded searchers, but more importantly, you went to a one-day masterclass or one-day seminar ran by Peter Lang, who has done 22 acquisitions, mostly off-market deals. And you shared a post on LinkedIn, and this is the reason I decided to reach out to, first of all, ask why did you decided to go there, and maybe like a short background of Peter himself.
Absolutely. It was a great event. It was a lot of fun. And it was fun because the LinkedIn post sort of went viral, which was unexpected, but very, very fun. Basically sharing notes that I'd taken from the event. But the reason that I went, and actually my wife Julia went as well. She runs the legal marketing, the legal SEO business that we acquired together. Peter has an enormous amount of experience in acquisitions, and actually especially in the agency world. And the principles apply to all types of businesses, but most of the businesses that he has acquired have been marketing agencies. And he has an approach for helping especially marketing agencies grow through what he calls programmatic M&A, where you're making multiple acquisitions a year. And we thought that was fascinating. And it was extremely valuable content because it was not 101 level at all. It just jumped straight to, it assumed that everyone in the audience, it was a small group, already was a business owner and had already either done acquisitions or had started down that path. And so all the normal stuff that you talk about was just completely skipped. And we got into much more, frankly, interesting content as a result. So that was what made us decide to go, and it made it a great time.
Okay, so it was such a small group that you all introduced yourselves in the beginning, and you went from there, right?
Absolutely.
Okay, so let's get into this. You have this Peter Lang M&A Lab notes, your document, and the opening question was that what is your goal you have for the next 3 to 5 years that feels scary, but would be amazing if you accomplished it? Tell me yours, and let's discuss this, and maybe you can share how it was on the seminar. Did you have to say it out loud, or how was it all?
No, so everyone just wrote them down. You didn't have to say them out loud. I put mine in my notes, which was to Fund 1 for Entrepreneurial Capital. We've raised about $11.6 million. And so my goal was that we've knocked that out of the park, and then that has allowed us to raise a Fund 2, $50 million, and that it's also on track to do north of a 5 times multiple invested capital. So that was which would be kind of like a 5-year timeline if things are going really well. So that was my goal.
Maybe you can share here a bit more about the opportunity you see when it comes to backing those searchers, because again, like putting together a $50 million fund, awesome. I believe you're going to do this, but having this goal of 5 times MOIC, this is like super attractive, and I would like to know more. Like, why do you feel this is what you do? Because it's an opportunistic goal, let's be honest.
Absolutely. Especially, and I'm kind of playing with the numbers here a little bit in terms of the timeline, because if we raised a Fund 2, probably be like 3 years from now, I think I said on track to deploy, because there's no way you're going to be at a 5x, 2 years into a second fund's life. But that's why I love the self-funded search landscape. The model that we have is that if we invest in a business at 3 to 5 times earnings, we do an Excel model at the point of investing where we say, if this business grows revenue by 5% a year for 10 years, no margin expansion, no multiple expansion, and then it exits for the same multiple, that math produces north of a 5 times MOIC, which is great. And it's why we love the asset class so much. And part of that's because there's meaningful leverage. Part of that is because the multiple is low. Part of that is because the investor terms are solid. And the question that is in my mind for the future, which isn't really relevant for Fund 1, is I feel excited that I think we can accomplish that with $11 million or slightly more of invested capital. I wonder about it being 50. And so that's what made that goal a little bit scary, to use Peter's term. Is I think that remains to be seen. And it's a problem for another day, but it's something we also think about.
How many investments do you think you have to make this happen?
Right. That's the problem, is that in our current fund size, we can do investments of, we say north of $300,000, but let's just say our average ends up being 750, something like that. And then that gives us, 14 or 15 total investments ballpark. I think it is unlikely to make sense as a model that we just do 5 times that amount. You have to invest more capital per transaction. And so then the question is, does that force you up market? Does that force you into another approach where maybe you're doing less SBA-backed deals and more deals that are just above the SBA threshold, which actually we're seeing very attractive deals in that range. And so maybe it remains to be seen. And we would much rather deploy smaller amounts of money with excellence than larger amounts of money with just chasing size and assets under management.
And if you think like how picky do you need to be when it comes to the deal flow you're getting deals per day, per week, per month, like what do you see, like how many of investments you have to make and are willing to make?
Yeah, we're extremely picky right now because we see roughly a deal a day. So call that 250 a year for 50, working weeks in a year. And we choose, 6 a year. Yeah, highly selective. That becomes trickier if you do a much larger fund. I think that probably the right way, if you were to do a larger fund, is to help your investments that are already doing well grow through opportunistic acquisitions after that, because you already know that the search is really good. You know that the business is solid. You have a deeper understanding of the industry, and now you're sort of doubling down on your winners. I suspect that that's the way to do it. So you're not doing more deals. You're just doubling down on the winners, but who knows? And again, it's a problem for 3 years from now, but always good to ponder.
Now there is a bold quote here. Every business problem can be solved through M&A. Talk about this.
Yes, this is one of Peter's lines. And I think, in some ways, every business problem can be solved by almost anything. Like every business problem can be solved by the right people. I strongly agree with that. But his point in saying every business problem can be solved through M&A is that it is a good mental question, like mental framework to use. Let's say that you have an issue with revenue diversification where you have meaningful customer concentration. M&A could potentially solve that because it could diversify your customer base. Let's say you have an issue with not having a lot of opportunities to cross-sell your existing clients because you only have 1 or 2 services. M&A can solve that. Let's say you want to expand to new geographies. That's, of course, obvious. M&A can solve that. I would disagree that it's always the right solution, but it always can be a potential tool in the toolkit. Certainly.
I asked, but you maybe forgot to answer like a little bit about Peter Lang himself. Like he has done like 22 acquisitions, mostly off market. Does he run a fund or how he does it all?
He basically owned a marketing agency and then grew his marketing agency and other marketing agencies through acquisition. He owns some other properties. He owns like growthhackers.com, which is like anyway, it sort of dates me a little bit, but back in the day it was like, and still is, like the premier growth hacking resource. So he owns some sort of other properties as well, but mostly running marketing agencies and growing them through acquisition. And then he sort of sold his collection of agencies and now is just like sort of traveling the world and doing some of these seminars occasionally for fun. Like he definitely doesn't have to financially, but he just finds it to be enjoyable. And I think, frankly, he's figuring out like, okay, what's my next big thing going to be? But they have young kids. And anyway, he's just traveling the world and having a great time.
These are oftentimes probably the best teachers because they won't hold back. There are no secrets.
Absolutely. Yeah. He's climbed the mountain, and so now he's like, oh, this is how I did it. Check it out.
Okay, another thing, Peter's number 1 cold outreach channel today is LinkedIn messages. What did you learn? What did you have to do?
I thought this was fascinating because the group was business owners. And so a searcher would need to, modify this thought process a little bit, but the group was business owners. And he asked us, how many of you get emails constantly saying, hey, we'd like to buy your business? And everyone's hand goes up. Then he said, how many of you get LinkedIn messages that come from someone who actually seems credible saying, hi, I'd be interested in exploring buying your business? And basically no one raised their hand, myself included. I don't get any. And I get a ton of LinkedIn messages, but never about that, which is interesting. It's a less appreciated and perhaps undersaturated channel, partially because you have to pay for it. It's not free like email and you can't just blast it out to people. But that was fascinating. And what he had us do is he shared templates of example messages. And I put an example that I actually used in the notes document. And mine was reaching out to someone else who owns a nonprofit marketing fundraising oriented business, because we have nonprofit megaphone, and basically saying like, hey, love what you're doing. I, have involvement in this industry by owning nonprofit megaphone. A searcher could say something else and would just love to chat. Like, I don't know if you'd ever consider selling, but would love to chat. That guy didn't respond, but someone else in the group got a response actually to 2 of their messages and like set up meetings that day, which is, the meetings were later, but like they got them on the calendar that day, which was fantastic. Julia's messing around with this now. She's actually got some responses and has some meetings set up. So it's like, this is interesting.
Do you think provide more value to the listeners and to get some people to reach out to you, would it be fine if we I'll just put call to action in the description so people can reach out to you and you can share this document with them, because there they can read actually, because mine printed out mine, but they maybe would like to use it as well. So if that's fine for you.
Happy to. Yeah. Just send me a connection request on LinkedIn and just say notes in the message. And then our chief of staff will send them to you right away.
So another thing, the first call. A lot of times, like I've been doing maybe 1,000 plus cold outreach to people. And in the beginning, you're very bad at building rapport. But the more you do it, the better you get. Peter taught you about doing those first calls and really like getting to know the business owner.
His belief is that the first call has only one goal, and that goal is bonding with the business owner and seeing if there's a sense of alignment and seeing if you actually like enjoy spending time together and like each other. Because if you don't, there's probably no deal that's possible regardless of all the business circumstances. It's just, what you would normally say for making friends with someone or getting to know someone is ask lots of questions, be interested, come with preparation about things that they've done and accomplishments they've had, and then share similar things as well. Share the same things that you're asking of that person. Asking about their goals, asking about the history of their business, asking about the culture of their organization, what makes it special to them. If they were to sell, what would be important to them in a buyer, and just lots and lots of listening.
Have you already tried doing those calls yourself? Because you mentioned you're getting 1 deal a day. Like, do you need to do cold outreach?
So the interesting thing for us is the deals that we have coming to us are searchers bringing us transactions that they have under LOI. And so we're interacting primarily with the searcher at the beginning, and then maybe the seller later down the road. But we're coming into the process from entrepreneurial capital much later in this process. Like the searcher probably had an initial call with the seller months ago, potentially, by the time they come to us.
Next thing, once you get to know the owner, there is the business audit.
This was fascinating because normally, and I've bought, a business. We did a bolt-on acquisition, so we bought 2, and we did not do anything close to this. We read the SIM, or, if it's an off-market deal, we just like talked to the owner, got general information, and then started discussing offers and valuation and structure pretty quickly. Peter does not do that. He says, how could I possibly give you an offer if I don't understand your business? And I need to understand your business. And so he has a remarkably robust audit that has 128 questions and that he shares with the seller, potential seller, and says, I would love for you to fill this out. And the way he positions it is he's like, even if you don't sell to me, this will actually be a great resource. 1, if you sell to anyone else, this is all the questions they'll ask and you'll be totally ready. And 2, you'll probably actually benefit from it yourself just by reflecting about your business and what all the strengths and weaknesses are. And it's good questions and very in depth. It's 128 questions. He got pushback from the group because the group asked, is this something that sellers will actually figure out? And he said, yes, if they are serious, they absolutely will, because why would they not? They want to put their best possible foot forward. They want to share as much as they can so that, to see if you're serious as well. And people who aren't serious definitely won't, but that's okay. It's like they weren't going to sell to you anyway. And so it doesn't matter. And he's like, of the 22 deals I've done, I have 128 question audits that they have totally filled out. And sometimes they don't know the answers to some questions, which is fine. And that is a great topic for discussion of why don't you know what your employee retention rate is, your customer retention rate is, or whatever.
A quick pause, and you heard that correctly. Grant gets to see 1 deal per day searchers bringing him. So if you want to access to a quality deal flow, I have to talk about today's sponsor, CapitalPad. It's a beautifully built deal flow platform. So if you want curated, high-quality deal flow and a platform that actually helps you win, where you can make those investments yourself, I'll just put the link in a description, or just simply go capitalpad.com and you can just apply there. So again, capitalpad.com and go apply. Now back to the show. That's fascinating because, the first thing probably if I could say as well is that many business owners will say that, okay, 128 questions, forget that, it's too much. But as you said, if they're actually serious, they will go through it and they will become like a better business owners because of these questions and answers probably as well.
Right. And it's like, if you're serious about selling your business, the due diligence is going to be more intense than that. It's going to be more than 128 questions. So like, why not get a jump on it? But it was interesting. I've never heard anyone talk about it that way, of doing so much in-depth analysis pre-LOI. There's another step called pre-diligence that comes after this, which is also pre-LOI, where you asked for financial statements and tax returns and lots of the info that you typically asked for slightly later in the process, especially in an off-market deal. But he said you could call it pre-diligence because otherwise, if you call it diligence, people say, well, we have to wait for the LOI. But if you call it pre-diligence, it's like, well, I guess it is pre-diligence, pre-LOI. Maybe that's fine, which is fascinating.
The smart way to name it, if I can say that.
Absolutely.
Okay, in a deal, terms are often more important than price. Maybe you can share some of his war stories or something, and what was the lesson when it comes to terms?
I absolutely agree with this. His point is that price only makes sense in the context of what the terms are. If someone said, I have a business that does $1 million of EBITDA and I would like $1 billion for it, I would like 1,000 times multiple. But I control the terms as the buyer. I'd be like, absolutely, I'll give you $1 a day for the next 1 billion days. So not a problem. Like, happy to do that. This has been my experience as well. I have never had success personally trying to get a seller to change what they want in terms of valuation. But I have had success saying, yes, I will accept your valuation, which is definitely on the high side. But given that, we're going to have to do terms that either include, meaningful seller financing over a meaningful period of time, meaningful contingent components through an earnout or something similar. It feels much more constructive. We're saying like, yes, absolutely. You're totally right. That's the right number. I would just have to structure it in this way. And if you want a different structure, then we just have to change the valuation, but happy to do whatever is best for you. I think that's actually very clever.
Yeah, the billion example is great, actually.
Yeah, happy to pay $1 billion. It'll just be over a long period of time.
Now, another note you've taken is due diligence. It's probably always like this, but Peter breaks due diligence into 3 phases: high risk due diligence, medium risk, and low risk. What were maybe some of the comments why he does it?
The biggest takeaway for me was that he does high risk diligence, of course, right at the beginning of the diligence phase, right after the LOI has been signed. And he waits for that to be done before kicking off the more expensive components of diligence that require outside support. He doesn't start legal or QV until the high risk diligence has been done, which I think is very clever, because if you start legal and QV too early, you often end up wasting a lot of money, because you probably only still have a 50 to 75% chance of closing this transaction after the LOI has been signed. So I thought that was very clever. He had a great spreadsheet that he uses to track all of these different items, and actually like 2 linked Google Sheets, one that's just for his own internal use and that one he shares with the seller. And so the seller can put info into their version. It automatically gets copied over to Peter's version, and Peter can have notes that are private just to him that he can see, but it keeps the documents in sync. It was just like a very clever organizational system to make it easy.
Then you have taken notes. There's a concept, risk register. What's that?
Yeah. Peter was big on creating shared artifacts that produce an alignment between the buyer and the seller. So one of those was a risk register, which is a Google spreadsheet where anytime either the seller or the buyer expresses hesitation or concern about something, and it could be the seller saying, how do I know that you're actually going to pay me the seller note payments? Or it could be the buyer saying, how do I know that this key employee is not going to leave right after close? And then we're going to have a major issue. Those things just get added to the risk register. and then discussed. He would give them like a severity and a likelihood rating to kind of help you prioritize. And then there would just be discussion about what are the things that are already being done that can help mitigate this. And then are there additional things that we want to do? And he's just like, you just churn through these and make sure that there's an answer that everyone's comfortable with. And then you keep rolling. And it's a nice way to have all of that in one place instead of having sort of fears and concerns floating around nebulously. There's just one place, there's a process for dealing with them. It's very similar, honestly, to the issues list concept in EOS for people who are operating businesses, where you have one spot, you put the problems there, and then you talk through them one at a time.
Did he share maybe stories like, we can see that Peter is extremely professional when it comes to the process of buying a business. You're always competing with other buyers on a great company. Did he maybe share the stories where maybe the seller said that all the documents and materials and Peter himself was the reason why he decided to sell the company to him? You understand what I mean?
Yes, absolutely. So that was the interesting thing, is because the group in the session, again, their initial reaction to all of this process, especially all this pre-LOI process, was that's going to be a turnoff for sellers. And, they're not going to want to do all this work. And Peter said, yes, exactly what you said. There were times where actually because of all of this, I was chosen as the buyer. And it puts you in a good position because you can say to the seller, these other people are just slinging offers at you without even understanding your business. That's a little concerning. I would be concerned. If you worked on this business for 20 years and now someone's like, yeah, sure, I'll buy it for $4 million without fully understanding the culture and the team and the clients and the dynamics. Is that who you want to sell to? Or do you want to sell to me, who is really working to understand this because I don't want to insult you with an offer that's wrong, that I would have made without understanding it. And he's like, what I really don't want to do, he said he had 100% success rate of not changing his offer after the LOI was signed. So there was no retrade. And that's because he already had the key info in much greater depth than honestly some people go even during diligence post LOI before the LOI. And so he just knew what am I actually willing to pay? And we don't have to have weird retrading dynamics down the road. He could sort of play on that in the minds of sellers of like, what do you think the odds are that someone's going to change their offer if they make you one right now, not really understanding the business? It has to be high. There's no way that they, without understanding, just intuited the perfect number. And it was an interesting perspective. It makes a lot of sense.
Now, and the last one is when the time comes to sell, what did you learn? What notes did you take?
Yeah, this was brilliant. His line is selling is just buying in reverse, which is obvious in many ways. But given all of this framework and structure, that's essentially what you do. You do the audit yourself and you have the 128 questions ready. You have all the pre-diligence, quote unquote, info ready in a data room, and you can decide when you give people access to each of the various components as they demonstrate seriousness in the process. But if you had 128 question business audit ready to go, if you had a data room full of all of the things for high, medium, and low criticality, diligence all ready to go, you can imagine how much, especially to a sophisticated buyer, that will give you in terms of credibility, because they've probably, especially if you're in relatively small businesses, they've never seen a seller even 10% that prepared in their entire lives. And it'll make you stick out in the best possible way to potential buyers as someone who, if they run the sales process this well, they're probably going to also be similarly put together and competent in the business operations. You're probably going to get a higher multiple just because you're so prepared and it's so impressive. And because we've looked at hundreds of businesses for sale, no one has ever had anything even vaguely close to this level of material ready in a data room when they decide to sell. Like not even 20%.
Now, when you take your own company buying process before you went to this seminar, and your company buying process now, today, after analyzing all the lessons, what did you change and what are you going to change?
We're going to start using the audit toolkit, especially for off-market deals. It just makes so much sense. And also and we're mostly supporting searchers. And so we're not trying to tell people that they have to change their process, but those who asked, we're happy to share resources that say this can be a great approach, especially for off-market deals or for on-market deals if you're trying to get a sense of how serious is this seller truly and how deeply are they willing to engage with me. Julia is currently working on exploring possible M&A opportunities for her to buy additional legal search engine optimization agencies. And so she's just going to use this whole framework, 100%. And we're excited to see how that rolls.
So you've also said that you've done acquisitions, invested in searches, raised a fund, etc. But this was the most valuable single-day professional development experience on M&A you've ever had. Would you like to add anything? What you learned? Maybe something you didn't take notes, or is there anything you'd like to add?
It was interesting at the end because it's a sophisticated group of business owners. And so Peter asked at the end, if you look back on what you wrote at the beginning of what would be a scary thing that you hope to accomplish in 3 to 5 years. And then he said, raise your hand if you are more confident now that you could use M&A to get there. Everyone raised their hand. It was interesting. I think my biggest meta takeaway, there are not a lot of, if you want to start a business, for example, there's a huge number of classes you can take. There's a huge number of books you can read, podcasts you can listen to. If you want to buy businesses, it's getting there. Like people like yourself are creating fantastic resources, but it's definitely still in the much earlier stages because it's more of a niche topic. There are fewer true experts, frankly, because fewer people have bought a lot of companies and lots of people have started companies. And it was just interesting because all of the things Peter was saying made a ton of sense to me, seemed very logical, and yet I had never heard them in my life. And I've done a lot of things. I got an MBA, I've bought businesses, etc. I've sold businesses. I've raised a fund investing in people buying businesses. And it was just interesting because there is a lot of knowledge out there in the minds of practitioners that is not well known. And that is interesting. I think that there's a huge return to professional development in general, but I think especially in areas like there's just an enormous return to it because it would be easy to go through life and never encounter some of these ideas because they're just not that well publicized yet. I'm grateful for you having me on and for Peter sharing because it'll help publicize some of these ideas a little bit further.
One more follow-up questions. I'm sure you raised your hand as well. So why do you believe that your goal is now more reachable than it was before?
One of the things that I've pondered, and you're getting like a peek behind the curtain because I don't know if we're actually going to do this, but one of the things that we've pondered is there a world ever where we would search ourselves on behalf of some of the searchers that we really know and like, and try and help create deal flow for them as well? Because we talk to searchers all day, every day. That's the thing that is most challenging, of course, is the search process is hard. And I wonder if we could be directly helpful for that, because we come across as actually much more credible than the average searcher. Because like I run businesses and have, bought and sold companies and we have a fund. And so I wonder if there's a world in which we can actually be very helpful to searchers that we work closely with by helping them find deals and maybe larger deals. And maybe that also helps us eventually have sort of proprietary deal flow in another sense of that term, that helps us deploy very productively larger funds over time. So we'll see. I don't know. It's a discussion that's currently live within our team. And, I don't know, but, if we do end up doing that, we can circle back in a year and we can talk about how it goes, but I don't know if we'll do it or not, but we'll see.
You know what's interesting, Grant? My editor said to me, like, he's editing the previous episode with you, and he said that, okay, he has seen different episodes before, and he said that, oh, this guy is such a clear talker, thinker, and like he was like, it's very clear of what he does, how he does it, and most importantly, he brought out that you're such a clear thinker. So I just wanted to make sure I'm telling this to you.
I appreciate it.
And
we're trying.
He's not the finance person. He's not the finance person.
That's fantastic. That's the goal. Yeah.
Okay, thanks a lot. Let's see when there is another seminar you're gonna go, but I think more interesting conversation is going to be once you're been implementing those and we having another episode of the acquisitions and investments you've made. Again, thanks a lot for doing this, Grant, and thanks a lot for sharing all those secrets.
Thanks, Mike. I appreciate it.